Hello, everyone. Welcome to another lovely episode from JayFx. Um, First of all, I want to say Happy New Month, as this is the first video I'm making for the month, and also it's been about 8 to 9 days since I dropped a new series. So, Happy New Month to everyone. This is a formal introduction to harmonic patterns, as you can see in the topic of the video, Introduction to Harmonic Patterns, and I decided to explore into other concepts as well. So today we're looking into harmonic patterns. And most of you might have heard this pattern somewhere, and you might have come across it along your trading journey, but maybe you're not familiar with it. You were not able to understand the principles and the concepts behind it. You are in luck because here we are starting afresh a new series of mentorship to help you understand how this pattern operates and how you can use it in your trading. Within the ebook, we have in chapter 5 and 6, where I show how this method can be used with smart money concept and Elliott wave. In this particular video, we'll discuss further about that. But basically, this is to let you understand that harmonic patterns are patterns that can be used as confluence on other strategies as well. These patterns are patterns that are very familiar with Fibonacci tools and also can help you understand the counter structure of the trend. So when it comes to harmonic patterns, it's something that can help you understand the reversal zones and counter structures. Smart money concept is a pattern that if you are familiar with it, you understand what I'm trying to say when I say you can either be sniping the right direction or you're sniping the wrong direction. One of them is going to be happening. And this is something that harmonic patterns can help you better improve. And it's currently still in review, so it's not going to be available in the link of this particular description, which is the introduction to harmonic patterns, but it's going to be available in the next and probably in the future. And one of the reasons why we are looking into harmonic pattern is because it's a very unique pattern, which from my studies, I've noticed that the pattern gives us a unique insight to counter trend and retracements. Now, the pattern is something that works hand in hand with Fibonacci tools, Fibonacci extensions, and most of these tools that could help you understand retracements and counter structures to the main trend. So, with that being said, if you understand smart money concepts, you would understand that there are two ways you could probably make an analysis with smart money concepts, and that is either you are correct in the direction of the prediction, or you are wrong and you're sniping the wrong direction. So when we say snipe, we mean you got a perfect entry, but it was on the wrong direction. So most of you who are starting smart money concept or you're new to this concept, you understand what I'm talking about. So when I started studying harmonic patterns, I looked into it and I noticed that they could also help understand what is going on the counter structure, which most of the time why smart money concept fail is because we try to use it on a counter structure. Because as you all know, smart money concept deals with internal and external structures, which is basically saying it deals with mainly market structure. So you could get it confused when you don't have some of this confluence that basically breaks down counter structures and helps you to understand the trend in a general scale, because smart money concept and her own tools, let me call it a her, are basically designed for market structure. What do I mean by that? So when we say supply and demand, order block, and all those stuffs, IPA candle, imbalance, these are all things we find within the trend. These are all things we look into when we have probably identified market structure and we are waiting for a retracement or we're waiting for a mitigation, But when it comes to concepts like Elliott wave or concepts like harmonic patterns, they give us insights to what could already be happening in the retracements, even regardless of what's going on the trend. Although Elliott wave gives you insight to the direction of the previous trend before the trend you're in right now, that is the impulsive and the corrective patterns. Harmonic pattern, on the other hand, is unique to the point where these patterns are basically showing you retracement levels within different range in the structure. So as you can see, we have from range X to A to B, B to C, C to D. That is saying if we're trying to break down the range based on market structure. And the market structure is used to form this particular pattern, which we now see and expect movement for. And then if you look at the patterns and the structures which they are forming, you will notice that they are forming basically around reversal levels, because it's either showing you a bearish trend, which is the red, green, red, turning into a bullish trend with a green follow-up. That is, I'm talking about the bearish scalp pattern here. And when you look at this now, you understand basically that we're talking about patterns that could help you understand reversal points. Okay, and these reversal points now are basically going to be areas where either a retracement is done to continue the trend to the obvious direction, or is going to be a point where the trend is complete and we're expecting a full reversal. So either way, we understand that harmonic patterns give insight basically to understanding what's going on in the retracement. So if you look at the charts where we have above here, you can see the trend is bearish and the harmonic pattern is giving insights to the bullish projection, which is the bullish retracement, and then expecting the next leg to form. So basically, my main reason why I look into harmonic patterns is because I decided to better understand what's going on the counter trend, so I can also have a much expanded approach to my confluence. Like I told you guys, technical analysis is all about confluence. And when you don't know how to, pair different methods together to give you a particular point of view or to give you a particular approach to the market, you then find yourself in a crossroad. And that is one of the things why I'm trying to avoid, which is why I'm, creating this whole system in the first place. Now, I told you guys, JayFx House is an academy where we break down technical methods of trading. But personally, for me, it's an experience where I get to learn different methods of trading and then bring feedback to a YouTube platform where I have to do it in a more corporate way, like a presentation. And at the same time, I have to learn what I'm teaching for me to be able to teach them. So it's also a learning experience for me. And also, I'm just exploring Forex trading. That's on a basic level. I'm just exploring Forex trading because I have learned so many methods, and I've basically developed a system around Forex trading. So if you are familiar with a method like Smart Money Concept, which as you can see on the Telegram and the YouTube platform, we produce materials and content related to not just for Smart Money Concept, but harmonic patterns, Wyckoff, all of those stuff. But when it comes to mentorship program, these are all different series. So I want you, if you know that harmonic pattern is not something you feel like you need in your system, you can move on. But at the same time, if you are someone who is an explorer like me and you would like to learn, you're open to learn, you're open to new ideas, and you're open to expand your confidence and also add to your knowledge, then you can hang around. This is basically designed to be an introduction. So I'm not going to go into much details about the concept or the pattern itself or the principles or the founder, which you can see over here. What I'm going to do is I'm just going to give you guys a basic breakdown, which is this, a summary of why we are attending to harmonic patterns right now. Okay, so we are Forex traders, and basically learning never ends. You have to understand that the more you learn, the more you understand. The more you understand, the more easier it becomes for you to have a more lovable experience in Forex trading, because either you learn from your mistakes or you learn from another person's experience, so you don't make those mistakes. So it's better we all learn together, and then you see how you can better advance your system. Now, also another key point I want to make about harmonic patterns is that these patterns are also following the same system of market circle which we have on Elliott wave, which is one of the reasons why I decided to bring the two of them together in chapter 5, I believe, where we talked about harmonic patterns and Elliott wave method. So there are much materials available over there on chapter 5, where I broke down basically how this relationship happens between the core principles of how they view the market circle. And they are both a little bit different, okay, but at the same time, we see similarities like the ABC, which is something we find familiar with Elliott wave, but they are different concepts, right? So I know you are seeing ABCD and you're wondering, what's the difference between this and Elliott wave. If you do not know Elliott wave, it's better for you to just go to the YouTube platform. We already did that mentorship around December to January, and you can easily get access to that particular recording right now from episode 1 to episode 9 before we actually formally start this of the harmonic patterns, so you don't have to get confused. But harmonic patterns is a completely different method of trading. I just want to get that cleared. It's a completely different method of trading from Elliott wave, but it's a good tool that can be confluenced with Elliott wave. Yes, they both deal with Fibonacci tools. They both deal with patterns that are similar like ABCD. And they both deal with lines. But you have to understand that because they both look alike doesn't mean the principles or the rules of identifying them would be the same. So you have to be open-minded. So this is one of the things I wanted to bring to our notice, because the pattern is not something that is new. It's been here for a very long time. And a lot of people have been using it to make money from not just Forex trading, but also in stock and other markets as well. But if you are a Forex trader and this is your first time you're coming across harmonic patterns, stick around. Maybe you might find out finding your edge around harmonic patterns, and you might end up, falling in love and furthering your studies from not just the channel to our Telegram community, but also to other platforms as well that you could learn how to use this particular method from. So that will be all for now, as this is just an introduction to the next project which we have in hand, and also to formally let you guys know that something big is coming and we are going to be starting a new series of study in the future. Thank you all, and I will see you in the next episode. Bye.